Guillermo Grimaldi. I'm a member of the Energy and Engineering Committee of the Argentina-Texas Chamber of Commerce. The Chamber is a nonprofit, volunteer, and independent organization established in 2016 to foster the commercial relationship between Texas and Argentina. The goal is to strengthen the value in key economic sectors by facilitating the integration and partnerships among large, medium, and small companies, investors, governments, and business organizations. We have chapters in Houston, Dallas, and Austin in the US, and Neuquén and Buenos Aires in Argentina. Also, we have 5 sectors committees: energy and engineering, health, food and beverage, real estate, and innovation and technology. We have 150 members, a network of 10,000 business contacts, and 80 business partners. This webinar is part of our 2021 energy program. The Energy and Engineering Committee was established in 2016, and its goal is to integrate Argentina and Texas, the oil and gas value chain, through knowledge, technological, business, and financing partnership among business, individuals, governments, and nonprofit organizations, promoting a world-class environmental, safety practices, cost efficiencies, supply chain innovation, and technological disruption. The program includes training and webinars, pitch events, business rounds, trade missions, and networking events. Our membership is growing, and I would like you to invite or become a part of our chamber. We offer discounts for young members, professionals, and SMEs. You can become a member by visiting our website, www.argentinatexas.org. I would like to invite you to our next networking event so you can go to us and see it. I would like to thank our sponsors, Pan American Energy, Rochelle, and Practia. To start with our webinar, our topic today is, can Argentina's upstream compete for capital? This will be presented by Mr. Rudy Montgomery and Enrique Gonzalez from Welligence Energy Analytics. Mr. Rudy Montgomery, he is a global head of research. He's possessing deep analytical insights on E&P strategies. Rudy joined Welligence Energy Analytics in 2010, where he currently oversees all upstream research. Prior to Welligence, he spent over 13 years at Wood Mackenzie, covering the Latin America's upstream and corporate sectors, as well as the US Gulf of Mexico. Rudy also worked for Hess in the UK North Sea business, gaining experience in well and facilities engineering. He's a graduate of the University of Edinburgh and really holds a master's degree in chemical engineering. We will also be joining Enrique Gonzalez. He's a senior analyst from the Latin American research. Enrique currently serves as a senior research analyst in Welligence Latin America Upstream Division. He has been covering Latin America for over 2 years with a focus on the Andean region. Prior to Welligence, Enrique worked in research and advisory at Rabobank, New York, and in project finance at a Santander Bank in Mexico. Enrique holds a Bachelor's of Science from NYU Stern with concentrations in finance and data science. So without further ado, Rudy, welcome. The floor is yours.
Okay, thank you. Thank you very much, Guillermo. And I'd like to start by thanking the Argentina-Texas Commerce Chamber for inviting us to speak today. So we're going to talk about the upstream sector in Argentina, how it's positioned as the industry leaves behind what was a very, very difficult 2020, and share some of our thoughts on what Argentina, what the government can do, should be doing to make sure that the country can attract the investment that it needs to fully exploit its hydrocarbon potential specifically thinking about the unconventionals, the Vaca Muerta, and so on. So let me just share my screen, and then we can dive into the presentation. So, okay, so hopefully, can you see the screen? Can you see the presentation, just to check?
Nope.
No. Okay, now you should hopefully see it.
Yeah, there we go.
Okay, perfect. Okay, so before I start, I just want to provide a quick bit of background on Welligence. So we are an oil and gas research firm. We began with a Latin America focus, but have since expanded our coverage to the US Gulf of Mexico and now Africa. Our web-based platform covers technical and commercial information on almost 1,300 upstream assets across these regions, each with their own valuation model, production, well level performance information, as well as covering exploration and development histories. We also track the M&A market. We track ongoing exploration activity, corporate strategies, upcoming licensing rounds, and so on. We work with E&Ps, service companies, banks, and other financial institutions. And off the back of that platform that we've built, what we're going to do is present to you some of our thoughts and analysis on Argentina, on the progress that's been made developing its unconventional resource to date, some of the challenges that it faces, and what we think needs to be done to, like I said, fully realize that potential. Now I'm going to start with a scene setter before we start to dive into Argentina. What we're showing on you in this chart here is the Capex Guidance for 2021 that's been provided by Latin America focused companies so far. And specifically what we're showing is the percentage change between the budget for 2021 and the estimated spend back in 2020. And what's very clear across the board, across every company from Frontera Energy in Colombia through to Pemex in Mexico, is that we are seeing spend increases planned. And overall, the Latin America region is ahead of the global average. So globally, when we look at planned spend increases, globally, we're looking at about a 7% increase in spend. In the Latin America space, it looks to be more aggressive, the plans for this year's. The Colombian focus companies, they're the ones colored yellow on this chart. Colombia is a business-friendly country whose oil sector, the assets, they're characterized by short cycle, conventional onshore projects. And this allows companies to react very quickly to market conditions. So they can pull back on CapEx very quickly, and they can start to spend CapEx again very quickly, depending on what the oil price is doing. You'll also see some large increases from some of the Brazilian focused companies. These are the companies in the green color. But the two big increases from Enauta, Maha Energy, these are smaller companies with smaller budgets. So as you might imagine, the percentage change can be quite extreme. But better to look at Petrobras, and you can see that Petrobras is guiding towards around a 20% increase in spend this year as it continues to invest in its world-class pre-salt portfolio. And then finally, we have Argentina, where we've had guidance from YPF, of course, and also Vista Oil and Gas. So YPF's planning an 80% increase, Vista a 23% increase. Now, Enrique is going to talk in more detail about YPF as we move through the slide deck. And we're a bit skeptical as to whether YPF can actually achieve this quite aggressive planned increase in spend. The company's indicated that it's willing to take on debt to fund that. But we have some doubts as to whether that will actually be achieved, and we'll talk about that in a few minutes. But just to summarize in short, the sector globally remains relatively conservative after the shock of last year. Balance sheet protection is very much a priority, despite oil being close to $70 today. But our companies in Latin America, including Argentina, they appear to be stepping up their spending plans more aggressively than the rest of the world, and there's perhaps a reflection of portfolio quality and the opportunities that they have to chase after. Now let's start to look at Argentina in a bit more detail. So I'm going to start with the overall hydrocarbon production at the country level. So this chart here shows country level production, and what we've done is we've broken it down by resource theme, and we're showing it from the start of 2015 through to the end of 2025, so kind of a 10-year period that we're looking at. My first observation that I want to share with you from our outlook is that the unconventional resources, so this is the shale oil, the shale gas, the tight gas, those unconventional resources are, of course, playing a growing part in Argentina's energy space. No surprise there. But actually, the growth is quite impressive. So the unconventional resources are growing from about 10% of overall production back in 2015 through to just about 40% today. And we're forecasting over the next 5 years that growth will continue, and the unconventional resources will account for over 50% of Argentina's total production. But you may also have noticed that, yes, sure, the unconventional production is growing. The overall production outlook, at least in our base case, is relatively flat. Unconventional growth is only really offsetting declines from the country's legacy conventional assets. So I'm talking about your established gas producers like Loma Lalata in the Neuquén Basin, all those conventional oil assets in the San Jorge Basin. So while we expect to see unconventional production growing over the period, the declines inherent in those legacy conventional assets, that's going to continue going forward, resulting in this flat production outlook that we have in our base case. Now, what I should also add is that we are intentionally conservative in our base case, and that's a result of the above ground challenges in Argentina that have held the country back over many years. So we're kind of deliberately cautious when making our estimates of levels of investment going forward, just how quickly companies will be able to grow production from their unconventional projects and so on. We do firmly believe the Vaca Muerta is world-class. It's a world-class resource, world-class rock, and that growth is possible. And like I said, that's evident in this chart when you look at the shale oil, the shale gas, tight gas production is growing. But we don't currently assume that all the many pilot projects currently underway in the Vaca Muerta make a very smooth transition to full-scale development, at least not in the short to medium term, which is what we're showing here. And we'll touch upon some of those challenges that we see very soon. And there's just to close out this slide on the conventional resource side of things. So you can see we're forecasting steady decline. An opportunity for the country is to slow that decline, to apply on a large scale secondary and tertiary recovery techniques, infill drilling programs, water flooding. Those types of operation can do a lot to at least slow the pace of production decline going forward. Another opportunity that we see, and again, we'll talk about this in a bit more detail when we look at YPF, is putting the right assets in the right hands. So small conventional oil assets shouldn't really sit in the portfolio of YPF. YPF should be focused on its large scale unconventional growth projects. It shouldn't be looking at these small projects where you need to make quick decisions. You need to work off a low cost base. They sit much better in the hands of smaller companies. And that's an opportunity that is not being fully taken advantage of in our view in Argentina. So that's a bit on production. Now let's look at activities. So this chart combines the monthly frac count broken down by operator. So we are very focused on unconventionals here. So the monthly frac count broken down by operator, along with the rig count in the country as well. So the rig count is that green line that you see, and the frac count is the columns. Now let's start by just quickly looking at the period January 2017 through to the end of 2020. And actually, the fact is that activity in Argentina was already declining before COVID-19 struck. And this was the result of the uncertainties following the 2019 presidential election. And you can actually see on the chart, we've indicated when that election took place that you actually saw a big drop in activity, both in terms of fracking and also that rig count. And then, of course, around April, May time of last year, we had that extreme market collapse when countries went into lockdown, the demand for oil collapsed, and also you had OPEC Plus releasing oil onto the market and crashing the oil price. And inevitably, activity collapsed, and Argentina actually had a period of time when there was no active rigs, fracking ground to a halt, and so on. And that makes sense. There was no demand. There wasn't enough demand for the oil and gas, so there's no point in drilling wells and completing those wells. Now, the good news is that things have gradually picked up since then. So if you look at the green line, the rig count, you can see that that's showing a very nice steady rise through to, I think the data is up to February of this year. Now, activity levels, they do remain well below the historic trend, but Argentina is seeing one of the sharpest rebounds in activity, at least in Latin America, when we compare the country to other places, even business-friendly countries like Colombia. Argentina is showing a quicker rebound in activity. So companies are putting rigs and fracking crews back to work. And most of this so far, this is being driven mostly by the Argentina E&Ps. So of course, YPF, Pan American Energy, Plus Petrol, Vista Oil and Gas. These Argentina-focused companies are kind of leading the drive towards more activity, and they're focused on both oil and gas. And of course, the unconventionals are an important part of these companies' portfolios. So in the shale oil space, YPF is getting back to work with the continued development of its core oil assets, Loma Campana, La Amarga Chica, Bandurria Sur. Vista is going to keep drilling ahead at Bajada de Palo Este as it moves into full-scale development, and Shell's actually getting ready to really step up production at its cluster of projects in the shale oil, in the black oil window. On the gas side, the partial success of Plan Gas Argentina, the recent incentive program to push through by the government to try and encourage more gas-focused development and to try to maintain gas production levels. And that will lead to more activity as well over this year and beyond. And we'll talk about the program itself on the next slide. But again, we're seeing the likes of YPF and Plus Petrol, the local companies, getting back to work on their gas-focused projects like Rincon del Macrujo, La Calera in the case of Plus Petrol, and also some other companies like Total with their Guadalcanal Este development. So let's look at the gas side of things in a bit more detail and highlight some of the opportunities and the challenges that we see in that space. And it's a very topical subject right now. Argentina does have a very developed gas market, and we had the recent auctions under that Plan Gas Argentina pricing incentive scheme. That's the government's latest price subsidy scheme that it's pushed through. And the program is designed to support existing domestic supply, reducing the likelihood of costly imports. So the question is, has this initial effort, has it worked? Now in this chart, we're summarizing the results of the first two auctions that we had. And in total, 70 million cubic meters a day of what was called committed volumes were offered by the companies. And that's what you see in the blue columns on the chart. And the prices associated with those committed volumes are indicated with the red dots. However, these committed volumes, this baseline volume, that's not sufficient to cover the winter period, which I guess is just a few months away in Argentina. And during that period, of course, domestic demand really does spike. And this is one of the things that makes it characterizes Argentina's gas market, is that volatility, that seasonal volatility between summer and winter, the extreme swings in demand. And so to try to cover that period of extreme demand, the government was offering higher prices than what you see on the chart there for the committed volumes to try and get companies to offer more gas. But this effort was, I guess, somewhat underwhelming in terms of the results. And you see that Tech Patrol and Pampa Energia, if the yellow and the orange, they did step up and offer some additional volumes during this period. But despite that wealth of gas that Argentina has, they are going to have to bring in a regas vessel to import gas through Bahia Blanca. They're going to have to import LNG. And the cost estimated by the government based on the latest reports is they're going to have to spend upwards of $1 billion to import that gas. And that's $1 billion that a financially challenged government can't really afford to spend. So why were companies unwilling to cover this winter spike? And the answer is very simple, and it's one of the challenges that Argentina has in trying to really maximize the potential of its gas market. The gas supply infrastructure as it currently exists is already largely fully utilized. So there just wasn't the capacity for most companies to offer up any additional volumes. There wasn't the pipeline capacity to take that gas to market, to take it from the Neuquén Basin to that main Buenos Aires market, to Bahia Blanca. And it doesn't make sense for these companies to invest in that existing infrastructure under a short-term incentive scheme, infrastructure that will only be fully utilized during these periods of winter, peak winter demand, and then you go back to summer when demand starts to fall. So it just didn't make sense for companies to fully commit to the additional volumes needed for Argentina to fully cover the winter period. So what's needed for Argentina to achieve full year-round self-sufficiency and become an exporter in the long term? It's got the gas, and the Vaca Muerta and Tech Patrol's proven what you can do with a good shale gas project in the Vaca Muerta. So with its 14 de Piedra project, it took it from nothing to over half a BCF a day of production in just 2 years. So that really underlines just what you can do if the conditions are right. So the country needs to develop its gas markets. It needs to build out more infrastructure. Now that's easier said than done in a nation that's historically been characterized by economic and political volatility. The easiest opportunity is to make full use of the existing export infrastructure in place. So Argentina is connected to Chile, it is connected to Uruguay, it's connected to Brazil with pipelines in place. That's the most obvious market to start to encourage more investment and to step up gas production is to supply these markets. And they do have supply agreements in place, but they are currently short-term interruptible contracts. In other words, the government can step in and stop those exports if the domestic market needs that gas. That's not going to work in terms of encouraging these E&Ps to really step up significant investment. They need longer-term contracts with guarantees in place that those contracts will be respected. But Argentina also, as well as the incremental piped exports, what Argentina really needs to really fulfill its potential is large-scale market development. So that would be things like LNG. So Argentina potentially becoming a large-scale exporter of LNG. There's potential to build out petrochemicals as well as other things. The challenge here is not, does the resource exist? The resource exists. The challenge here is financing. All these projects require billions of dollars of financing. Where does that come from? That would be very difficult to secure that financing in Argentina's current macro environment with inflation at 40% plus, with controls in place on capital, with the ongoing economic and political uncertainties. Very hard. It's nearly impossible to secure private financing for such projects. There's no doubt the state would have to be heavily involved if any of those were to be moved forward. Gas storage would also help. So companies can store excess gas in depleted fields, for example. And there are a number of pilot projects underway, led by the likes of CGC and YPF to really test up the feasibility of gas storage. Currently, gas storage is not really a feature of Argentina's gas market, but there is potential for it to come into play, and that would really, if it works, it would help smooth out those seasonal fluctuations. But right now, unfortunately, the trust in macroeconomic stability just doesn't exist to justify large-scale private sector capital needed to finance these big infrastructure projects. a big liquefaction plant. And like I said, you would likely need to see significant state support to come in to really move these projects forward, at least in the short to medium term. And with that, what I'm going to do now is I'm going to pass over to my colleague, Enrique. He's going to start to talk more about YPF and also the shale oil side of things.
Thank you, Rory. And yes, now we wanted to take a look at YPF, the dominant operator in the country, in some more detail before we dive into unconventionals. So in the following chart, we're breaking down YPF's portfolio. And each one of these bubbles is a producing asset. The y-axis represents recent production, and the x-axis is the percentage of reserves remaining. And finally, the bubble size is proportional to reserves. So here we can clearly see there's a large cluster of blue bubbles on the bottom left. And this represents YPF's conventional asset base, which is small in terms of reserves and includes very mature assets. So as we were suggesting earlier, we think these assets would sit better in the hands of smaller companies that are willing to invest in new development work, and this way leaving YPF to focus on its core unconventional growth projects. And the company has actually indicated it's looking at divestments in some of its recent earning calls, but we still need to see how that will play out. The move makes a lot of sense in both terms of operational focus and also as a mean to funding investments in growth. However, we've heard some skepticism on whether YPF will actually go through a sale process or not. And now going back to the chart, we can see how most of YPF's growth projects are actually unconventional assets. These are the large green and orange bubbles that we can see on the right. These are basically early stage projects with a significant number of reserves remaining. So how do these projects really compare to other ones across the region? We can actually see that in the next slide. So here, what we're doing is we're benchmarking greenfield Vaca Muerta projects that lie in the oil window against other new projects in the region. On this chart, we're comparing the Brent break-even price, which is the long-term price required for the projects to achieve a 10% return. So the lowest cost projects are going to be on the left side of the chart, and then the highest cost projects on the right. And we show the operator and with their logo and country location against each one of the projects. So you can see how many of these projects are actually very competitive with break-evens below $40 per barrel. And these are the kind of projects you would want in your portfolio. And the most advantaged projects here are the offshore projects, which have a large scale of resource and also attractive fiscal terms. However, a lot of the projects are also at risk. Yes, so the green shaded area marks the $50 to $60 per barrel price range that most companies are assuming as the long-term price right now. So looking at some of the projects on the far right, we actually have several of them located in the Vaca Muerta. And what this suggests is that work needs to be done to either improve the productivity or costs, or ideally both for these projects. We know the shale in the Vaca Muerta is world-class, but the new developments there are highly economically sensitive. For example, a simple 10% reduction in well cost can push the break-even of most of these projects under $50 per barrel. And I also want to reiterate that this is for greenfield projects, which need a significant investment in infrastructure. There are more developed Vaca Muerta projects like Loma Campana, which actually have much lower point forward break-evens for new drilling. And since most of the infrastructure is already in place. And now moving into the next slide. Here we're diving a bit deeper into the shale oil. And despite all of the above ground problems we've mentioned, the progress below ground has actually been steady and in the right direction. Wells are becoming more productive. The first chart on the left shows the average cumulative production to date by well drilled in a calendar year, which with each one of the years given a unique color. Here we're using Loma Campana as our reference, as it has a large well data set. And we think the year-on-year improvements that have been achieved by YPF are pretty clear. We can clearly see the transition to horizontal drilling in 2016. There's a big step change in performance. And then as the company has gradually drilled longer laterals and completed with more frac stages, it has also kept achieving better and better well productivity. And for example, the average lateral length in Loma Campana for the wells has gone from around 1,200 meters in 2016 to over 2,000 in the present. Then moving on to the second chart, here we show the steady progress that has been made year on year across several of the key shale oil projects in the Vaca Muerta. These include Bajada del Palo Este, La Marga Chica, Bandurria Sur, and Loma Campana. And here the y-axis shows the EUR per 1,000 lateral length at the average well. Sorry, per 1,000 feet of lateral length. And then the x-axis is a timeline. So as operators optimize their completion strategies over time, the positive trend in productivity gains is quite clear. Now moving on to the next slide. We know that of course there is a limit, right, to well productivity gains, and that limit is cost. There is no point on delivering a program of world-beating shale wells if none of them can return a profit. So lowering costs and controlling costs is absolutely key to the future success of the Vaca Muerta. As we saw in our break-even benchmarking, some of the Vaca Muerta projects are economically marginal. This means that small gains or losses in productivity actually have an outsized impact on valuation. And the same goes for price movements and cost reduction gains. So as we can see on the valuation sensitivity chart on the left, through which we are showing the impact of project parameters on NPV10s, a 20% reduction in well costs can lead to almost 100%, 150% increase in project value. And conversely, value can be quickly destroyed in a custom inflationary environment. And the biggest impact is actually price, which is not a surprise. But however, the good news is that costs have actually been coming down. The chart on the right shows us the progress made by the sector in driving down drilling and completion costs. So note that drilling costs, which are a function of drill days and the rig rate, only show a modest improvement over time. But the big gains have actually been made in lowering the completion costs, and this will remain the priority going forward. The major cost item is sand, and a decent amount of sand still has to be imported. But Argentina has made great progress transitioning from importing sand from places like Brazil and the United States to start using more and more domestically sourced sand. However, the costs are still high, and the reason is that the mines are not located closely to the Neuquén Basin, which results in high transportation costs. And what we think is that a better infrastructure would actually help greatly in decreasing the logistical cost of bringing sand to the region. And now moving on to the next slide, just to wrap things up, we have some closing messages. So our first takeaway is that there's many attractive projects across the region, but the Vaca Muerta must compete, and particularly with company budgets remaining tight in 2021 and capital only being allocated to the best projects. Our second takeaway is that there has been some impressive productivity gains in the Vaca Muerta. There has been, some impressive productivity gains made in the recent years in the Vaca Muerta, and this means that newer projects will increasingly hit the ground running. And then our third takeaway is that cost reduction and control is key for the full potential of the Vaca Muerta to be realized. Much of the resource is still economically marginal at best in the current price environment. And on top of this, the gas market needs further development. We think Argentina could achieve great things with the Vaca Muerta, but the challenge, as usual, is mostly above ground. The economic uncertainty, high inflation, capital controls, infrastructure constraints, and need for new markets, alongside other items, are some of the major challenges. And with companies remaining cautious with regards to spending, and some of the bigger players eyeing up diversified energy strategies, the challenge is there for Argentina's policymakers to actually create the right environment to attract investment. So yes, thanks everyone for your time, and we hope you found this session helpful. And now we can open things up for Q&A.
Well, thank you, Rudy and Enrique. Can you hear me?
Yes.
Yes.
Okay. We have some questions, and I would like to start with the first one from Guillermo Romero. He's saying, what is the role in the plant gas of companies such as Mega, TGS, TGN, and Gasoducto del Pacífico?
Okay. Let me see. So just going to go back up to plant gas. So I guess the challenge for those companies, and they of course are the companies who own the infrastructure. Under plant gas, the objective is to sustain production levels and to try and minimize imports. Plant gas is not necessarily there to really catalyze, to incentivize new gas developments. So you're not going to see new shale gas projects sanctioned under plant gas. What you're going to see is the likes of YPF, the likes of Total and the other companies continuing to develop their existing projects. So drilling new tight gas wells, new shale gas wells. YPF has already guided, Enrique, correct me if I'm wrong, I think they're planning to spend $1.5 billion over the next 4 years. And they've already highlighted which projects they're going to spend that money on. None of those projects are new projects. They're all existing projects. So the role of the infrastructure companies is simply to continue to provide that capacity to take that gas to market. There's not really, I wouldn't say there's an opportunity for them to build out new capacity under plant gas in its current form. That opportunity comes when the government gets conditions right that will make the likes of an ExxonMobil, YPF, maybe Tech Patrol looking at another shale gas project. The conditions need to be right for them to sanction new shale gas projects that will need that extra capacity to get that gas to market. So I don't think plant gas is really going to offer that much big major opportunities for those infrastructure companies.
Thank you, Rudy. I have another question from Fernando Tuero. He's asking, what type of reserves are those in 1P and 3P? That's on slide number 9. I think it's for Enrique.
This slide. So these are Welligence reserve estimates for the YPF portfolios. We model every asset ourselves, and we make our own forecasts on the development activity going forward, the number of new wells that will be drilled. We model everything. We model out declines for every well. We have type curves for every well and every asset. The numbers that we work with at Welligence, you can view it as a kind of combination of 2P and 2C reserves. So a mix of proved and probable, and then some reserves that a company may categorize as contingent under reserve certification guidelines, but we think that contingent resource will be developed commercially. So this will include for sure 1P reserves, but more than that, the 2P and 2Cs included on top of that. But we don't cover those kind of incremental 3P volumes in our reserve estimate.
He's saying that's a sort of P50, right?
Like a P50, perhaps with a bit more, because we're including some of that contingent resource as well. So for some of the unconventional projects, for example, they may still be at a very early stage. Because of that, the company is limited in what it can book as 1P reserves, what it can report as 2P reserves, but perhaps there's a big part that is categorized as contingent. Well, if we feel that that resource will be developed, we'll include it as well. So it's like a P50, but plus perhaps a bit more with the contingent element coming into play.
Great. I have another question from Stephen. Hi, could you please give some insight regarding water needed for Vaca Muerta? Is it part of the big cost, and what operators are doing to reduce the cost?
So I'll have a first go at this. Enrique, if you have anything to add, chip in. My understanding is that, and from the people we've spoken to, is that accessing water is not one of the big challenges, despite the fact that a lot of Neuquén province, for example, is almost like a desert-like environment. The big challenge for companies, and when we talk to them about it, big challenge is more on the sand side of things and trying to reduce the costs associated with the sand, and that is securing more locally sourced sand, or reducing the logistical costs within Argentina. Is that fair, Enrique? I feel like the challenge of water access is not something that people view as strongly as the sand side of things.
Yes, no, I think I would agree, but yes, also as we see fracking activity increase, of course, well, the demand for water will increase. But we think for now, yes, there is enough to satisfy the demand.
That's a good point, Enrique. Yes, in the current environment, based on current activity levels, yes, access to water is not an issue, but it may become one going forward as fracking activity starts to pick up. And of course, if the government does really create that right environment for companies to really press the accelerator on development, then yes, then that will be a challenge that will need to be overcome.
Okay, I have another one. Do you think Argentina will qualify, broadly speaking, to capture investment in a recovered oil demand? And what alternatives are,
So
what will be the alternative?
Yeah, so I mean, I guess so a success story for Argentina before COVID hit was they had been very successful in attracting the right companies to pick up positions in the Vaca Muerta. So you had Shell, you had Total, Exxon came in, you had Equinor building out positions, and these companies were also picking up some offshore exploration acreage as well. So that was a big success story. I guess it would be nice to see some more of the kind of US focused independents, the specialists in developing unconventionals coming in, and that may well happen as they start to run out of inventory in the US. But you had the right companies in place. Then, of course, we had the downturn, COVID hit, and now there's a lot more uncertainty in the long term about oil demand. And some of these bigger companies, like Enrique alluded to at the end when he talked about them eyeing up more diversified energy strategies, that's going to be a challenge for Argentina to compete for capital. Not only that, but they have their existing portfolio of projects, and it's a global portfolio. And so Argentina needs to compete for capital within the context of those projects. And as we showed on our break-even analysis for new projects, it's kind of hard to compete with pre-salt Brazil or some of these very straightforward shallow water projects in Mexico. And then, of course, you've got the US Gulf of Mexico and so on, where these companies are active, and it's hard to compete for capital. And what companies need is stability, right? They make investment decisions based on they're long-term investment decisions. They want the contract sanctity and security to know that they can get a return on that investment. Of course, they don't control the oil or gas price. So, if the market dictates that return is not going to be as big as they thought, then that's fair enough. That's the market that's determined that. But that's the challenge for Argentina, is for the policymakers to give the companies real confidence to really step up investment. The IOCs I'm talking about, your domestic companies, sure, YPF, Police Patrol, Tech Patrol, it's a different equation for them. They're already, given that they are Argentine-based companies, you'll see them continuing to invest and develop their projects. But for the IOCs, it's a tougher investment decision. And actually, just to finish this point off, you did see some of these guys start to sanction new projects. So, Shell, as we said, is moving to complete phase 1 of its development in the black oil window of the Vaca Muerta. Exxon had actually taken FID on a phase 1 of development, and you'll notice these companies, they only committed to the first phase of development. There was a lot more that could be done, but they weren't going to commit all that capital to these much bigger projects until they could see that phase 1 was working, until they had some confidence about the macro environment. And I would say that confidence is less today than it was at the time they took sanction. So we'll see what happens with subsequent phases of development there.
Okay, thank you. I have another question here. How is Vaca Muerta regarding euros and dollars well cost compared with other unconventional resources worldwide, especially the Permian in the US?
It's still pricier, I would say, and that's because it's just a lot easier to get things done. In onshore US, you have a very business-friendly environment there. The logistical costs are not the same, and like Enrique showed, it's the completion costs that offer the biggest opportunity to truly to drive down the cost associated with new Vaca Muerta drilling. So it's still on the high side, especially for those companies who are still at an early stage with their projects. There's still a lot of work to be done to bring down that cost to really make the projects work in not just the current price environment. Remember, you need to get these projects working in a $40 price environment to really be confident about making that type of investment. So Permian costs for sure, I would say are lower, but for well-established reasons around ease of logistics and ease of doing business, and the kind of extra costs that come with working in Argentina currently compared to a place like that. But as we showed in our sensitivity analysis, small gains, small reductions in costs, just modest increases in well productivity have a big impact on project value. So a 10% reduction in that well cost, even better, a 20% reduction, that really does make a big difference to the value of the project, can double the value, and it drives down that break-even cost and really gives companies the confidence to keep investing. So it's still more expensive than Vaca Muerta, but you have a lot of potential clearly to create value by continuing to drive down the costs.
Thank you, Rory. I have another interesting question here. It's while Capex seem to have reached the plateau, do you think it's feasible to lower it substantially? And what are the improvements seen in the US compared to improvements in Argentina?
Yes, we see potential to keep lowering those costs. And the costs that we showed in that chart, it's based on I guess a relatively small subsection of what companies are doing, or of the companies active in Vaca Muerta. Not all of them are so public in sharing the progress they're making, driving down costs, and cost benchmarking is a key issue for the sector. So yes, we think there's definitely potential to keep bringing down those costs. Like we said, we think the cost of the sand for the fracking, that's one of the biggest opportunities for the sector. But that needs, again, possibly the support of the government and the provinces. They've talked for a long time about building out more rail capacity that could be used to transport in sand from some of these mines in Argentina to the basin. And that would obviously help take trucks off the road and so on, but they're not there yet in building out those large-scale infrastructure projects. So I think there's definitely, for sure, there's opportunity to drive down those costs, both through actual locking in lower logistics costs and also being more efficient at actually doing your operations. So trying to drive down the times, and I think there's some limits to what you can do in efficiency. Limits to how quickly you can drill the well. There's going to be a limit to how quickly you can frack the well and so on. But there'll still be room for improvement in that space as well.
Okay. Thank you. It looks like there's no more questions. And I don't know if you, Rudy and Enrique, would like to add something after all these questions.
Just to repeat, thank you to everyone for joining us. We hope you found the session interesting and useful, and thanks again to the Commerce Chamber for inviting us. I really appreciate that opportunity.
Yes, no, I would also like to thank everyone, for their time today. And also, if you want to follow up with any questions, definitely feel free to reach out.
Okay, there's an email at the bottom of the presentation where they can reach you, right?
Yes, yeah, we'll share a copy of the presentation that can be sent to the attendees, yeah. Perfect.
Okay, well, once again, on behalf of the Argentina-Texas Chamber of Commerce, thank you, Rudy and Enrique, for your great presentation. It was very interesting with a lot of information, very valuable. So thanks again, and thank you all of the participants for assisting this, and we'll see you in the next presentation webinar.